All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, August 9th. Excuse me, 9th. Theme of the day, well, definitely a risk-off day, no doubt about that. Even though the S&P was only down fractionally for the day, only down 37 basis points for the day, but in your higher beta, more growth areas of the market, some of those areas that really were on fire over the last week, high short interest names, those names got hit pretty hard today. Small caps also gave a decent breather today after some nice outperformance over the last couple weeks. They were down 1.3% for the day. And the VIX, remember the VIX only measures, it doesn't measure the volatility in the growth stocks. It doesn't, measure what the ARK fund is doing, right? It only looks at short-term implied volatility for S&P options. So VIX was only up 2% today, which kind of makes sense considering that the S&P was only down less than 0.5%. All right. Sometimes the reason why I point that out is because sometimes traders think that the VIX does something else, thinks that it's like the complete fear index. All it does is measures the short-term implied volatility with what the S&P is doing, which really didn't have that bad of a day. By the way, risk disclaimer is in front of you. Please read the whole risk disclaimer. Everything that we're going through is for information purposes only. Okay, so if it wasn't S&P that was that did much today, what did? It also wasn't bonds, right? Those were kind of quiet for the day. But if you go down to the bottom of my screen, some of those areas, for example, we'll go through a couple of these charts, and then we'll come back to the S&P. But so XRT, for example, was down 3.8%. I forget what it did yesterday. We'll bring that up, and we'll also talk about today's numbers. That takes out Friday. Excuse me, I'm looking at the wrong date. That takes out what Monday did. So yesterday had a huge day for retail stocks, but they gave it back and then a little bit more. They were down 3.8%, and it's kind of important to watch for those types of reversals, right? What areas we kind of saw that. So I think today was a little bit of a continuation with what we saw, in the afternoon yesterday. We saw a lot of stocks, particularly momentum stocks, reverse. Some of them still ended up positive for the day, but again, it kind of just set the tone for what to expect for the day. So that's retail. I said I was going to mention what the actual breadth was, and again, look at the Dow. The Dow had 17 up, 13 down. So again, just different stocks. Because if you look at what the NASDAQ did today, right, you had 1,924 decliners and 844 advancers. So again, it kind of goes to the theme of the day, because you do have more higher beta, faster moving stocks in the NASDAQ. Those really took a hit. And you could come up with an opinion about this because we do have a big report tomorrow with the CPI report. But it just kind of also just seems like, perhaps some of these stocks, I don't want to say we're priced to perfection to the upside, but they've been on quite a run and probably due for some move. So what do we do at this point? Right, where we've seen a little bit of a pullback. A lot of people talking about, I've seen so many of these charts going back to the S&P where people are drawing, a horizontal line saying, hey, we're back up to where we were in June. That also coincides with the bottom, the bottom level of these. Does that mean that, that this run is over and we're going to start heading down? I think paying attention to one of the things that I said yesterday and last couple of days is pay attention to the 5-period moving average. That's the first step if price loses that, and we did lose that in the S&P, right? It's tough to see this line, especially when the red comes into it. But we are starting to lose that, and in fact, we did close below it, and the 5-period moving average is starting to slope lower. So we may be on the cusp of a further move down. I always go to the 1 hour chart to look for some clues. And the one thing that I see is we do still have some support, right? Now, again, losing the 5-period moving average is not great because you're losing the short-term trend, but we haven't really broken anywhere here. And you can see one of the lines that I've got drawn in here is the 200-period moving average. Why do I have this line on my charts? Well, it's because it sometimes will kind of really define what the trend is, right? A couple weeks ago, for example, I had a bunch of, I saw a bunch of traders saying, hey, we've got an inverted, we've got a head and shoulders on the short-term chart and we're going to break lower, right? And one of the things that I told those traders a couple weeks ago was, well, watch your support, right? Using volume at price, specifically the market webs indicator that we use, there was no break of support, right? So I would also be looking about that, even if we get a little bit more volatility to the downside. I would watch this 4100 level, right? And that's actually, it's funny because a lot of times it doesn't always end up being a round number like that. But in the S&P futures, I would watch 4100. And right now we're still holding this 200-period moving average. Note before that we did drop below it in here, as price as it's been sloping higher. So, there's a couple things to go off there, and why I'm not like overly concerned yet. The other thing is too, and again, this is kind of, I'm being a little bit optimistic, even though we're losing this 5-period moving average. And the reason why is because I think that we're due for a little bit of a pullback after the run that we've been on, and especially in some of these stocks that have just been going ballistic. And I hate to use the phrase the meme stocks, but the fact that they're rallying as well, and they probably shouldn't be. I hate to dampen the meme enthusiasm, but these are more or less some of the bottom of the barrel stocks, right? They don't have a lot of revenues, and we are still in a right in the middle of a tightening cycle, and it is a different story when the Fed is inserting pumping liquidity into the market versus what it's doing now. So very different environment that we're in, with a tightening cycle going on and the meme stocks going up. So one of the things that I've talked about too the last few days is many of these names have gotten to have a really high short interest, right? So they were probably, to be realistic, right, they may have gone down a little bit too far. And I'm talking about the names that kind of moved up on earnings a bit, the Carvana, the Wayfair. But it doesn't mean that these are going to be the market's leaders. In fact, they're probably still going to be the market's laggards. But when the rubber band gets stretched as far as it did, with names going down as much as they did, in a Carvana and a short interest of 30%, they are ripe for that type of short squeeze. But again, those types of moves, in my opinion, may come undone in terms of that rubber band getting stretched and being snapped, right? So shorts probably had a cover, fueled a lot of that rally, and it kind of set off a little bit of a domino effect, with a couple of those names, having to be covered, and then seeing basically a wave of that go on. But yes, we're pricing in about 70 basis points. One thing that was interesting, just to talk about, the inflation report that we're going to get tomorrow, which is the CPI, which has a ton of eyeballs on. The media, as I've said before, the media loves the CPI report. The Fed likes the PCE deflator report better, right? But the media will make a big deal about this report tomorrow. One thing that I thought was interesting is, I think the last two reports, we've heard the White House come out the day before the report and kind of talk down basically trying to dampen the report before it came out. I didn't hear that take place today. I didn't hear the White House reporter, and it could be they just weren't asked about it too. I don't know. But regardless, I didn't hear any of that, talk of, hey, well, it's transitory, that type of talk, right? It should start going down. It's not our fault. My dog ate my homework, right? We didn't hear any of that type of talk today. So we'll see if that's some type of a signal that we got. But regardless, the X food and energy is 0.5. 6.1 is the number, is the headline number that you will hear, because that's the year over year number. So we have not seen this report come down the last couple months. We'll see if it comes in a little bit lighter than expected tomorrow. Okay. All right, so some stocks, right? And I spent some time here on the S&P. I didn't go over the NASDAQ. The NASDAQ did get hit a little bit more. So this did break, if we zoom in here, the 5-period moving average, right? And did go below, right? But, and we're right at that 200-period moving average. We're also still inside the value area for the week. Now, the 80% rule is triggered for both S&P and for NASDAQ, which basically means once you enter into the value area after being outside of it, right, there's an 80% chance that you could go through the one side of it, right? So that rule is in effect, and we'll see if that gets fulfilled before the end of the week. All right, and then Russell, which as I mentioned, that is still kind of holding on to. Now, it did come back and actually dipped inside the value area, but is holding that 1915 level, basically closed right out there. All right, so so that's the indices. And the one thing I would say, again, I'm being a little bit of an optimist here, but we've seen I've got an earnings list, names that beat earnings, either beat, sorry, not beat, but had a strong earnings reaction, or had a gap up, right? We've seen so many of these names run. It's actually going to be good for these names to consolidate a little bit. And again, I'm talking about the names that reported, all the names that reported earnings so far, right? I'm looking for the potential leaders. I'm looking for the relative strength, right? It's nice that some of these names that didn't really have good earnings that rallied, because they were a bit oversold. But I'm looking for names that may have gone out to 52-week highs. One of the names, like an ENPH, for example, right, was actually up 1% today. So again, I think this name might need a little bit more consolidation in here. But on a day where the NASDAQ is down over, the Qs are down over 1%, IWM down 1.3, the leaders may actually do pretty decently, right? And another one too, I think I got the wrong symbol. I always put the wrong symbol in for this one. It is why can't I find it here? I have it on my list. Just give me 1 second. Was it AEHR? There it is. Sometimes at the end of the day, I do forget the symbols, but I mean, this is another good example. This is still raging since earnings, right? On earnings, took out this VPOC, came back in to settle in, and since it kind of did that, it's basically still going after it took out those highs. So that's more or less what I'm going to be looking for. One name that a couple names that I had my eye on today, didn't trade them, but TMDX had this big move. Look at the difference in volume, right? Big volume on the move up, and look at the little volume on the pullback, right? So that's one I'll be watching. Another one too that I've been talking about is this Cloudflare, right? Again, this is an expensive name, but right, same thing. Big volume on the gap higher, on the move higher and gap, And so far little volume moving back. So I actually started a position in this one today. It may even come back to get to the 5-period moving average to let some of these moving averages kind of catch up with the price action. So it may be due for another day of consolidation, but that's why I kind of just get involved and start a position. All right. Some other names, and this is more today was more of a low volatility. Those names rallied today. XLU, for example, was up 1% today. XLE was up 1.7%. We did talk about that in the pre-market session. This has helped a couple times the last few days where there's been a break in some of the growth areas. And it seems like some of the lower volatility areas kind of catch up a little bit. XLE was up 1.8%, XLU up 1.1%. The steel names were also strong today. I did play. Today wasn't just. I just kind of gave up on some names a little bit too early. But the name that I've been going to is this Nucor, which was up 1.5% today. I did not stay in it for the. As soon as my position went red, I decided to. All right, and so here are my trades again. Not the most stellar trading for the day, but I just thought it was going to be a kind of choppy day, and even UNH kind of just faded for the day. I'm still in that trade, and we'll kind of hold that as it's more of a defensive play. One name too that we've been talking about too is McKesson. Right. Somebody asked me about this on Twitter. I do take some questions from Twitter and try to work them into this video. But someone asked, what's the deal with this one? Why has it been so strong? Well, take a look at so number one, it had really good earnings, right? And that's basically, that's important, right? The names that just crush their earnings reports are going to hold up better, right? As some of the names that I just went through, the names that have not seen, that are still attracting buyers because their earnings were so good, are going to hold up in a bad market. The other thing is, look at is this name expensive, right? The cheaper names in a tough tape often hold up. You'll find that healthcare usually holds up pretty good when the tape becomes a bit defensive. All right, guys, that is it for the video. But I will say this, there are so many people who think whenever there's a little bit red on the tape that the world is going to, that the world is ending. I would just start looking through, and that's why we've been compiling a watch list of go-to names. Let some of these names that just basically went ballistic to the upside, let them come in a little bit. They're going to be the ones I believe that are going to provide some really good signals. So consolidation in some of those names that have been super strong, I think is going to help a lot, actually, right? So that's why I said in yesterday's video that actually some weakness would actually be welcomed at this point. All right, guys, have a super night, and I will see you bright and early tomorrow for the old inflation report. Have a great night.